Yeah, okay, mate. So sorry for late reply. I did see this earlier. I just didn't get time to reply to it. I was trying to catch up. I was away for 10 days there with the missus. So I'm just trying to catch up and I'll be more active. But just catching up on everything today. Now, yeah, you said yellow bullish stop hunt on the 1 hour. And you said it respected the long-term blue line. I'm assuming here and then through here. And then your 1 hour bullish stop hunt. So he said something else there as well. You know, this was flipping green here. You can see it was a long downtrend. It started flipping negative here, and you can see it negative, and it was flipping negative in here before it even dropped down. So you can see the power of this. You know, there was 4 of these were all red here before it actually rolled over again. You know, so that keeps you out of the trade. That even gets you short potentially. This is a 10-minute chart, but you know that is very, very powerful information. Now, so yeah, the yellow line held here, and let's look into that bullish 1 hour stop hunt. So I'll just draw a similar line here. That was the 1 hour bullish stop hunt. Down in here, you had the price was just right here at 23. It had already flipped 2 candles ago, basically. So 1, 2, it already flipped 2 candles. You could have attempted to get on board as you've seen these all rising. I don't know about this top one, but yeah, I'm not sure if I've got the same settings as you here. 20. These are the settings I usually use: 20, 35, 50, 70, and 100. Now these are the short-term settings that I use. I also do have longer-term settings on a different window. But from looking at this, you can see here it popped and here it popped. So we do look to be kind of similar on the same page here, from what I can make out. I mean, if you did see this here, you can see that there's not many sellers, there's not many bears left here, as this had the bullish 1 hour stop hunt. So it's suggesting that the dip on the 1 hour stop hunt was a buy, because there was not many sellers, there's not many bearish sentiment. But even still, even if you got on up here or whatever when it flipped green, I suppose that's okay. I think you were up here. It had a couple of candles to the upside, maybe 2, 3, somewhere there. So you can see even from there, that was a 7% bounce from where you were posting. So you know, you were on the right track, you were on a great track, because you were following the sentiment tool that was trying to flip, and flip on all of these were trying to flip. Okay, so you were on the right track. You had a bullish stop hunt. The RSI was rising here. You can see the RSI is over 50. Ideally, that's what you want to see. You want to see the RSI above 50. Of course, if you see sentiment trying to turn, you could try and get on a little bit earlier. But once you see it over 50, that's a good sign of strength. So if you have it over 50, if you have it all flipping green, rising sentiment and all trying to flip green, you know, that's what you want to see, because that's potentially when you can get moves. And there was increased volume here as well. So you can see that, you know, what you were looking at was perfect in a way. It did give this beautiful 7% move. If you could make a 7% move every day for a long period of time, or a decent period of time, you'd be a multi-millionaire in no time, no matter what size your account you traded at. So it is about finding these low risk, high reward opportunities when, you know, all of these sentiments are flipping green. Maybe Bitcoin is also green on the day, can kind of help you, can help us understand that the market is trying to be bullish. I mean, if Bitcoin's having a big red day and the market is kind of dropping hard, and maybe this sentiment wouldn't be, maybe there's more of a chance the sentiment could not give a 7% move, but the market was obviously moving well. If I just move back here, you can see when all of these were flipping green, right? They didn't give such a good entry. I mean, you could have, the top 3 were flipping green here, kind of here. So there was some upside first before taking a little bit of heat on the trade. You could have been down 3%. You know, later, I suppose it went up 5% or whatever that is there, 5%. So although they were flipping green, it wasn't perfect. There was a bit of dip on it. but if you were watching this rising, you could have maybe attempted to get on board a little bit earlier. But I'm just saying, if you don't, we don't always trade the market perfectly because it's not easy. If it was easy, everybody would be billionaires. But I'm just saying that, this was flipping green here, and you can see it was flipping green, and eventually you could have made good profits. Of course, it did roll over again, but the tool was flipping green, and it did give the opportunity to make profits. Sometimes in a choppy market, if you're trying to get on board, you might have to try and get on board early, as you see the sellers, the bearish sentiment is getting weaker and weaker and weaker, and eventually this base here breaks to the upside. But as if you waited here until this flipped green or this flipped green, the market has already moved up here, and we are in a choppy environment, so sometimes it can be late, and sometimes you may have to get on board early as it's flipping green, and which may have got you on board somewhere down here to get that bounce. So of course it's not always easy, because if you hesitate and you wait until they all flip green especially in a poor market, you might be getting on board a little bit late, and before you know it rolls over. So it is important now to look at the larger time frames also, just like you were doing here. So what I want to get at now is, you can see that this is red on the weekly. Now when you see it red on a weekly like this, you have to then think to yourself, this bounce here that we just looked at today, that was a 5 or 7% bounce, you have to try and look at that objectively and say, well, the likelihood is that this is not going to flip green. Okay, so this bounce here is limited, and you may just want to get out with quick profits and then trade the new weekly candle then, instead of buying here and hoping that it's going to hold and hoping that it's going to continue up higher. If the weekly candle was green, if this was just flipping green here at this, like just say it was here, just say this was a 7% bounce here and you were flipping green here, right? Just say that we were trading that right now, and this bounce here was a 7% bounce was here. Well, you could hold this trade in anticipation of the weekly candle flipping green and running higher. But when you're buying down here, it's not so safe to be holding this trade, because you're in a deep red situation that could actually roll over lower next week. Okay, so this can be a good day trade, but maybe not a good swing trade. If you were trading this and it was the 7% bounce here, well then you could hold it, because you can see that the weekly chart is trying to flip green. So it is very important to take into consideration the higher time frames. So very well done, for posting that. But I'm not sure exactly, did you draw this line by eye, or did you find some volume point of control? Did you go to the weekly chart, the monthly chart or whatever? I'm not sure how you drew the line, but it is holding on that line wherever you got that line from, holding for now. Okay, but yeah, so very good work on spotting this and identifying the trade that setup. The setup was very good. It was also these bases here can pop up sometimes. Maybe here as well. You can see that it popped up here. See the way the red 200 is not too far above price. In a bounce situation you go above, but you can see here it was red and it rejected off the red 200, but you can see there it was bearish. And I suppose, well, you got a fake out here on the RSI. Okay, that was a fake out on the RSI, but this fake out on the RSI, if you had watched the sentiment tool, it would have told you that this was a fake out. Okay, so maybe as soon as you drop back down under 50 here, you could have taken the short here, because you're below all moving averages. You have faked out and now below 50, and the sentiment tool is still red. You could have taken that short. If we actually look at that situation there, well, you can see that price did drop 7%. You can see the declining sentiment, declining. It was getting weaker. Of course, it was declining after a drop like this, so that was you know, that's a bad drop. It would scare people away. And from there, it was never able to recover. It broke below all moving averages here, consolidated into it, created a bear flag type pattern, and away it went. And these as well. See when these start flipping green and then come back to being red again. You know, obviously that's a sign of weakness. I mean, you can see a small one here, for example, and it gave a small trade, right? But you know, it was green, it was peaking up green, and you know, it started to flip red again there, and it just gave a small weakness there. You know, if you were scalping or whatever, you could have seen the trend to drop. Maybe you wouldn't even have caught 3%. Maybe it could have been a 1 or 2% scalp into that. That looks like it gave a bullish 1 hour stop on then to bounce back up. Anyway, mate, yeah, 10 minutes on the video, so I hope the video helps. But as you can see, you know, this sentiment tool can be extremely powerful when you can find the right setups. It keeps you out of bad trades, and it can find very good trades.